Hey folks, it's Simon here with your Tao Weekly market outlook for the week beginning Monday the 3rd of November 2025. Well, the S&P capped off another positive week. If we look at the weekly chart, you can see we were up about 0.7%, which is, not bad. It was a busy week. We had most of the Mag 7 reported last week. We had the FOMC meeting, so there was a lot for the market to digest. And most things went the bull's way. We got a rate cut. We got a slightly more hawkish at Jerome Powell in the press conference. But the market is potentially looking through Powell now and thinking, well, this guy's not going to be around much longer. And Trump's new guy in there is going to give us the rate cuts that we want. Earnings were generally well received. Meta was out of the Mag 7 stocks, the obvious exception. The market really took exception to that one-off tax charge, which did decimate their earnings for the quarter. They're looking at a little bit lost below the 200 SMA. But the Mag 7s more broadly actually look fine. If we look at the ETF, it's trading at just off all-time highs. Sentiment generally seems very, very bullish. AI fever, FOMO, really kind of in the driver's seat here at the moment. I'm closing out October with one of my best months in a while. I was up about 25.5% for the month of October, and I'll do a video on how in a few days. But right now, with kind of everyone so bullish, I'm more inclined just to be on alert for any potential problems. There are a couple of problems that I'm focusing on at the moment. One is just this action in the VIX. All right. So if you look at the last 4 trading days, we had S&P up, VIX up, S&P up, VIX up, S&P down, VIX flat, S&P up, VIX up. Now, the VIX usually falls when the S&P is up. The correlation there, it's about negative 0.8. So around 80% of the time, when the S&P is up, the VIX will fall and vice versa. Now, come back to early October, we had 5 days in a row where the S&P was up and the VIX was up. That had never happened before, and that preceded October's shakeout. That was this mini sort of one-day shakeout that happened on the 10th of October. S&P was down 2.7%, and then we just traded in a range for the next 9 days. All right, so 3 out of the last 4 days, S&P up, VIX up, doesn't necessarily mean the VIX is going to accelerate higher, but it is something that I'm focused on. The other thing is breadth is not looking great here either. This is the percentage of stocks above their 20-day moving average. You can see it's been diverging sharply with price. This blue line is making lower highs, even as price makes higher highs. Only 39% of stocks in the S&P 500 are above their 20-day moving average. That's it's a pretty shocking number for a market that's at all-time highs. Number of stocks above their 50-day moving average is similarly poor, again, making lower highs while the market's making higher highs, and that percentage is barely 40%. All right, so it just highlights that, again, it's tech, Mag 7 doing a lot of the heavy lifting again. And if you look at SPY, which is the market cap weighted S&P 500, compare that with RSP, which is the equally weighted S&P 500. This one looks like it's rolling over. All right, the bulls have kind of lost control. It's not to say the bears have gained control just yet, but price is trading below the 50-day simple. Okay, so that's a warning sign. If you're playing this market bullishly, tech remains in the driver's seat. But, there's a lot of optimism getting baked in there, and positioning is kind of crowded to the long side again. Okay, so trend and momentum remain bullish, but there are reasons why I am curbing my bullish enthusiasm here. And I'm just being more selective than normal about risks that I'm prepared to take in this market. It's another busy week. Like I said, Mag 7, except for NVIDIA, have reported, but it's still a very busy earnings calendar. Some of the current sentiment leaders include things, or definitely Palantir is one of them, Uber, Shopify, Spotify, AMD for sure, Arista, Supermicro. We've got some healthcare stocks like Pfizer, Novo Nordisk, Humana. We've got McDonald's. We've got Robinhood, IonQ, AppLovin, Qualcomm, the Trade Desk, Open Door, MP Materials, SoundHound, a bunch of stocks that not as big in terms of market cap at all, but some of these stocks punch above their weight in terms of market sentiment. Earnings season as a whole has been really solid. So far, 64% of S&P 500 companies have reported, and 83% have beaten earnings expectations. That compares with the 10-year average beat rate of 75%. So very solid. And if markets do pull back from here, it most likely won't be as a result of lack of earnings momentum. Anyway, that's what I got for you this week, folks. I hope it helps. I wish you good trading, and I'll catch you next time. Thank you.